Market slips to the day's low, Midcaps drag, IT and Realty lead the decline while healthcare and auto buck the trend. The CERC approves market coupling for power exchanges in the day-ahead market segment from Jan 1, 2026, delivering a body blow to IEX. The move is expected to see business migrating to other exchanges, the stock tanks.
IT stocks have declined despite a standout performance from Infosys, even as Coforge and Persistent Systems fall due to steep valuations and some concerns on margins for the former and deal wins for the latter.
Dr. Reddy's climbs after a sell-off in earlier sessions as sales come in mostly in line and margins beat estimates. The company also guides for healthy growth and margins going forward.
And Prime Minister Narendra Modi and UK PM Keir Starmer are set to sign a free trade agreement between the two countries. Under the agreement, India will cut average tariffs for UK goods to 3% from 15% earlier. A typical expiry session playing out, and we are entering the final 150 minutes of the trading session. You're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormas Fatakia. With me as always is Vamakshi Dhoria. Vamakshi, firstly, good afternoon. You'll be losing count of the number of earnings that are anticipated as the day goes by. We've already had a couple of them coming in with Nestle and Indoco, but there is a huge list that's lined up, be it Bajaj Finance and a lot of other broader market names.
Well, absolutely, Hormas. After the session we had yesterday, the bulls would have hoped for a session in the green, but clearly not playing out. Since the get-go, we've languished in trade. In fact, the Nifty is trading with a cut of almost 200 points as far as the day's high is concerned. It continues to be under pressure. The broader markets too not doing too well. When we take a look at the advanced decline ratio, it is largely in favor of the declines. It's almost 1:2 as far as the advanced decline ratio is concerned. The mid-cap end of the market reflecting that, down almost 0.7%. But largely, like you pointed out, Hormas, it's been an earnings-heavy market. Whatever big moves we're seeing on, in the broader markets is largely being driven by numbers. Take a look at Persistent Systems. That stock is down almost 7%. Indoco Remedies on the flip side is doing quite well, up almost 6% in today's trading session. On the other hand, when we take a look at some of the stocks, can't take our eyes off IEX. That stock has tanked in today's trading session, and how PTC India on the other hand doing quite well. But Hormas, any other stocks that you would like to add?
You're just mentioning IEX. We'll just get Vivek with a more deeper dive on this, but we just heard from the management of PTC India, and they mentioned that HPX, where they hold a 22% stake, they are very confident that within the next 18 to 24 months they will have a 33% market share. They're expecting it to be a three-way race now in this market coupling thing. But just as you were highlighting, Vamakshi, it's all numbers driven. And take a look at these names that I just highlight before we get to the deeper dive on this. Force Motors is one of them, 14% higher at a record high today. Cenors Pharma, 11.5% higher. Thyrocare, 10.5% higher. All of them are result reactions. So good numbers are getting rewarded, the bad numbers are getting punished. The not so good numbers, you can't necessarily call them bad, but of course the not so good numbers in the IT sector, from Persistent to Coforge to Infosys, all of them were expecting a good reaction to it, but it has been the opposite of that. Rima is joining in with a deep dive on this. Rima.
Indeed, on the growth front, Infosys, Coforge, Persistent all did very well. Infy was at 2.6%, Coforge was a stellar 8%, but the stocks are correcting. So let's quickly run you through a couple of reasons why. One for Infosys, beginning with that. The upper end of the revenue guidance, which is 3%, has remained unchanged. But now the upper end also includes an acquisition of 40 basis points, which means the organic guidance has been cut by 40 basis points at the upper end. So that could explain the disappointment. For Coforge, analysts are pointing out that the EBIT margin shared by the company at 13.2% has certain one-offs. So, for instance, a bonus cost, the forex element. If you strip that out, the adjusted margins would be a lot lower. Secondly, even this capex spend, the company has spent more than $60 million to set up an AI data center for its clients. Now, data centers, up until now, IT companies have never invested in capex. They've always been an asset-light model. But now with this investment, it becomes capex heavy. And it's not easy. There are costs associated with maintaining that. And therefore, analysts are a tad bit worried. And thirdly, let's come to Persistent then. Now, Persistent's revenue growth, you could quibble, was a little short of expectations. 3.3% versus 3.8% expectation. The company has deferred the wage hike by 1 quarter, which means there are concerns, in the mind of the management, perhaps. There is uncertainty. And finally, the deal wins, you can call them steady, or you could, on the other hand, say it's unexciting because they've not increased on a quarter-on-quarter basis. And finally, for companies like Coforge, Persistent, they've been such darlings of the IT cap. The valuations are on the higher side. These stocks are trading at about 30, 35, 40 times PE. So that also, makes it difficult for the stocks at this juncture. Back to you.
Well, thanks so much for that, Reema. That was a good roundup of all the earnings we've seen so far. But we also spoke to the management of Persistent Systems as well as Coforge. Let's listen in to what they had to say.
We want to be a $2 billion company aspirationally. Again, this is not a guidance. By FY27, we want to be at $2 billion. Now, if you do the maths, we have to compound from an yearly compounded annual growth rate at about 19%. It will definitely have some amount of M&A, the acquisition part. Now, depending on the size of the acquisition, we may get there faster. We may have smaller acquisition, bigger acquisition. And to that point, look, at any point in time, we are evaluating multiple different options. We have said our acquisition strategy is twofold. One, Europe as a geography, we are currently at a 8.5 to 9% revenue clip. We have grown Europe at the company pace for the last several years, but we want to take a step change in Europe. We want to grow Europe over the next several years to 15% of our revenue. And that is basically to balance our revenue profile. And also, as we grow bigger, it's a healthy mix to have. Second part, we have said we want to be very well known for what we have always done better, the technology capabilities.
The EBIT is going to hit 14% for the current fiscal. And our business, our firm has always seen a sequential increase in EBIT in margins across the quarters. This is quarter one. We've landed at 13.2% despite very strong growth off the back of the ramp up of the Sabre large deal that we talked about. We feel extremely confident that the EBIT number that we will deliver in the current fiscal is going to be 14%. So from our vantage, 5 large deals, a next 12 months signed order book that is almost 47% higher than where it was at the same time last year. EBIT margins profile which should improve very significantly this year. H2 in turn again should be materially better than H1. So the year from a revenue growth perspective and from a margin improvement perspective seems to be turning out to be an exceptional year.
That was a roundup of the IT earnings, and Persistent and Coforge, both of them continue to sulk in today's trading session. But of course, the big accident of the day has been IEX, and it started off on a 10% lower circuit, and the circuit has only intensified from 15 to 20, and now the stock is down 26% as we speak, and this is after the CERC approved the implementation of the market coupling norms, which was a major overhang for the stock. Vivek is now here with a complete breakdown of what has transpired, what are the implications for IEX, and what does the shareholding look like for the company. Vivek.
Well, thank you so much for that. An all-round comprehensive, analysis as far as this entire development is concerned. Remember, the CERC approved market coupling for the day-ahead market. The implications for exchanges as well as some of the key stakeholders. Remember, the Central Electricity Regulatory Commission has given the green light for the implementation of market coupling in the day-ahead market. So the spotlight will be on several key listed players that stand to be directly or indirectly impacted by this particular development. Of course, IEX with near 100% market share in both the day-ahead market and real-time market, it is expected to see a shift as far as the competitive dynamics are concerned, and also stands to lose market share. Dalmia Bharat, remember, holds close to 11% stake in IEX and could witness a valuation impact depending on IEX performance post the implementation. And along with that, PTC India will be a beneficiary given the fact that it owns a stake in HPX, that is Hindustan Power Exchange, which is a rival platform that stands to gain market share in a coupled regime. What do brokerages say? Remember, UBS termed the CERC's nod for market coupling as a negative surprise. It noted that while only DAM is being coupled in phase 1, the real-time market coupling contributed close to 30% to IEX FY25 revenue. So a total of 80% of the revenue of IEX will be impacted. Now, when you're talking about Bernstein, it has maintained a market perform rating on IEX. However, it has reduced the target price quite drastically to 122 rupees a share. Bernstein points out that the order is worse and quite different from what was earlier expected. It anticipates competitive pressure to reduce transaction charges, affecting IEX margins adversely. According to Bernstein, DAM contributes for 46% of IEX volumes, RTM 40%, and the TAM 14%, reinforcing the significance of the DAM segment for the exchange's overall business model. Looking at the quick shareholding, remember, IEX has strong institutional holding as far as the shareholding pattern is concerned. SBI mutual funds through various schemes hold over 9.5%. Parag Parikh mutual funds holds close to 5%. ICICI Prudential mutual funds through various schemes again holds close to 4.7%. And Mirai Asset holds close to 2.3%. LIC holds around 4%. Retail interest in IEX2 is quite high. It has remained stable, though, on a sequential basis. March 2025, there was close to 28% shareholding of retail. In June 2025, it was close to 29.5%. Now, the outlook towards a post-coupling environment pose a significant risk to a dominant platform like IEX.
Well, thanks so much for that, Vivek. Earlier, in fact, we also spoke to Nikhil Negania, who's the director as well as the senior analyst Bernstein, to understand the impact of the rollout of market coupling in a phased manner. Let's also listen into that.
The impact, we think, will be twofold. Number one, the impact will be on loss of market share. So on the day-ahead market, at about 45-46% volume for IEX day-ahead market, where if you look at global peers, in UK, we saw coupling impact the largest player losing market share from 80% to 60% post-coupling. In India also, in our estimates, what we are building in, we are cutting IEX market share in the day-ahead market from 100% to 60%, but that's over a period of 3-4 years. And second impact, which I think will be equally big, is transaction charge. Now with coupling, we think the only thing exchanges will have to compete against other is transaction charge. And they will start giving discounts to larger players, larger buyers or sellers on the exchange, which could bring the transaction charge down from 4 paisa to 3 paisa or even lower possibly over time.
IEX has now just extended its losses. Now 28% lower is where the stock currently stands, and below the mark of 130 currently. And Bernstein had cut its price target down to 122. The stock already at 135. Now, the Enforcement Directorate is conducting search operations at multiple locations in Delhi and Mumbai linked to Anil Ambani group companies in connection with a money laundering investigation. Now, the ED sources told CNBC-TV18 that the raids are linked to a money laundering probe being conducted against companies of the Anil Ambani group. The agency is examining allegations of diversion and siphoning off of public money, allegedly around 3,000 crore rupees, and was illegally diverted from Yes Bank between 2017 and 2019. SEBI is also learned to have shared its findings with the ED as part of the ongoing investigation. CNBC-TV18 has reached out to the company as well, and we await comments on this matter.
Well, thanks so much for that update, Holmas. But let's slip into a very short break. Up next, on the other side, we get you the latest on the India-UK Free Trade Agreement. So don't go anywhere. Welcome back. You're watching Business Lunch on CNBC-TV18. Well, Prime Minister Narendra Modi has arrived in the UK ahead of signing the free trade agreement with the United Kingdom. That will take place later today. My colleague Parikshit is joining us with more details. Parikshit?
Well, the big headline is that India will be reducing the average tariffs for UK products from 15% to 3% under the FTA. So UK products such as UK cars, Scotch whisky, cosmetics, gin, soft drinks, lamb and medical devices will get cheaper in India. UK's clean energy industry will also have unprecedented access to India's vast procurement market. And this is according to a statement by the UK Prime Minister's office. The UK insurance industry will be able to expand in India because there will be a binding investment cap in the FTA, and also there will be locked-in access for UK financial services companies. So they will benefit from certainty, transparency, and they'll be able to expand in the India market. On the India side, let me begin with marine exports. FTA will eliminate tariffs on 99% of marine exports from India, including shrimp, tuna, fish meal, and feeds. Tariffs on Indian leather and footwear will be eliminated from 16% to zero. Duties on Indian textiles to be reduced from 12% to zero. India's leather exports to UK will get preferential access over Bangladesh, Pakistan, and Cambodia. Tariffs on engineering goods will be reduced from 18% to zero. Generics, they are going to benefit from zero duty access in the India market. So the Indian pharmaceutical industry, the generics market will benefit significantly, and so will gems and jewelry sectors, toys, plastics, chemicals, all of them will benefit from reduced tariff concessions and reduced barriers of entry in the United Kingdom. We will also see zero duties on 95% of agricultural and processed foods. So your exports of fruits, vegetables, cereals, pickle, spices, processed foods, ready-to-eat foods, all of that will get cheaper. But India's red lines on agriculture have been protected. So there'll be no concessions when it comes to dairy, apples, oats, edible oils in the India market, and neither wheat, rice and maize.
Parikshit, thanks a lot for that update. Numbers from Canara Bank at the bottom of your screen. A decline in its net interest income, an uptick in net profit. We'd be able to check whether that is due to a higher other income component as well. So the stock, though, has seen a spike to the highs of the day now after the results announcement. So it'll be interesting to see how the asset quality picture has shaped up during the quarter. We'll get you more details on this in just a bit. But shifting focus then, the United States and European officials signaled progress in tariff talks on Wednesday after US President Donald Trump announced a pact with Japan, and China said its vice premier would attend bilateral negotiations next week. Take a listen.
Just made a deal with the European Union where they're going to pay the United States of America 100% of the cost of all military equipment. They're going to ship it to the European Union, and then they'll distribute it, and much of it will go to Ukraine. It's been a long time since you've heard those words, because we're in for $350 billion. But now we send it to Europe, and Europe pays, and we're in the process of completing our deal with China. And as you know, the UK, we made a deal. It was a very good deal for everybody. Everybody's happy. It's always nice when everybody can be happy. But mostly we'll be charging straight tariffs to most of the rest of the world, because we have over 200 countries. People don't realize that's a lot of deals. Even if you're like me, a deal junkie, that's a lot of deals. That would be too much for anybody. Ooh. And we're making deals with various Asian countries that need it. And it's actually hard to believe, you don't think of it, but Asia is very close to Alaska, relatively speaking. It's not the closest, but it is pretty much the closest when it comes to oil and gas and energy. And we're making some incredible deals.
Well, that was President Trump talking about the trade deals, but we're still hoping for a trade deal with India soon. We'll have to wait for more clarity on that. But let's slip into a short break then. But as we do that, a quick reminder for our viewers, it is time to recognize the champions. Get ready for an evening that honors India's most promising SMEs, the champions behind our nation's remarkable progress. From groundbreaking innovation to grassroots impact, these businesses have powered growth, inspired change, and redefined ambition. HSBC presents CNBC-TV18 SME Champion Awards Season 2. India's most coveted SME Awards platform is all set to finally announce the winners on 25th of July, 3 p.m. onwards.
Welcome back. Bringing you the latest on the Google versus CCI front. Google has moved Supreme Court against the CCI directions on Play Store billing policy. Ashmit is here with more details on this. Ashmit.
Well, this has been a long-standing dispute between Google as well as the Competition Commission. The CCI order, if you remember, had come out with very stern findings against Google, saying that there's been an abuse of dominant position with respect to the Play Store, with respect to Android, and with respect to its in-app billing system. That's something that's at the heart of this entire dispute. What is also relevant is that while Google is directly challenging this before the Supreme Court, the startup community will also be watching this very carefully, because the core concern that had been raised and that was upheld by the NCLAT is that Google was in fact abusing its dominant position with Play Store for asking for imposing conditions on app developers to use the Google billing system for their in-app purchases. This is something that the CCI took objection to, that was upheld by the NCLAT, and now in challenge to that, Google has come before the Supreme Court. Bear in mind, they were looking at a penalty of 936 crore rupees at the hands of CCI. That was watered down to 200 odd crore rupees by the NCLAT. So that issue of the penalty component and the implications with respect to what the fallout for Google's policies, for payment systems, for Play Store could be, for that particular issue, Google now knocking on the doors of the Supreme Court.
Well, thanks so much for that, Ashmit. But moving on, global payments platform PayPal has partnered with India's UPI as part of its new offering, PayPal World, which will link global payment systems and digital wallets. Earlier, we spoke to Alex Chris, the CEO of PayPal, to know more about the company's India partnership. Let's listen in.
India is an essential geography for us, right? This is a country that is moving rapidly into digital commerce. There is vast acceptance of digital wallets. And, I will say, even after we made our announcement earlier today, the number of inbound requests that I had from consumers just thanking me for including UPI, because there's so much commerce cross-border between different geographies around the world into India and out of India. I think this was one of the biggest and most important partners we could have, and I'm thrilled that UPI is a founding partner of PayPal World. I think with the PayPal World offering, we may see significant adoption of the services that we continue to offer. As you mentioned, we've got cross-border capabilities that our customers are loving, and we are continuing to see that business grow. So, India is a very important market for us, and one that we will continue to invest in, and we'll do it with partners that matter, just like UPI.
A slew of earnings have come out over the last couple of minutes. I just pull up them up one by one. Canara Bank, we just addressed these numbers a few minutes ago, and the stock has now surged to the highest point of the day. It gained as much as 4% after the results were out. So Canara Bank is one of them. Asset quality has improved over there on a sequential basis. Indian Bank is the other one. That too has seen a spike after the results announcement. There you can see 2.5% higher on Indian Bank. Motilal Oswal is the other one. Numbers just came out a few minutes ago, and you see if there is any reaction in that stock as well for Motilal Oswal. Choppy moves so far. And V-Mart Retail is the other one. The numbers just came out. All of those numbers will just be flashed at the bottom of your screens. So stay tuned. And V-Mart Retail was the stock. There you can see an 11% jump there on V-Mart Retail. So slew of earnings. We'll keep you posted on right here in all of those numbers that come out. But with that, it's a wrap on this edition of Business Lunch. Midcap Radar on the other side.